Wouldn't it be amazing to put your money into a profitable investment that gives you huge returns? Well, just as we wish to multiply our income as we work towards that retirement life of beaches and vacations around the world, not all deserve our money. Over time, several investments have come and gone. So to keep you on the safe side, today's video is all about those investments you should avoid in the future. Remember that investing comes in all forms and sizes. Here are some of the ones that you should avoid, like the plague: penny stocks. While penny stocks are entirely bad all the time, this is a type of investment that should remain in history due to the level of risk involved. What's this really about? Penny stocks are shares available at ridiculously low prices. However, through some gamble or guess that the company has a chance of becoming big in the future, people decide to invest hundreds of dollars in penny stocks, hoping that they could go up. But more often than not, they drop to lower levels, and you'll lose all that money. Yes, it's exciting to invest in penny stocks, especially when you put in $1,000 for stocks at 2 cents each, and it becomes about $10,000 when it goes up just 20 cents. However, this is only suitable for those who love the get-rich-quick life. Getting rich overnight is not something that just happens. The chances of things going badly are way higher, so be ready to put in the work instead. Timeshares. We can compare investing in timeshares to investing in a brand new car. From the moment you let go of thousands of dollars for that car, it starts to gulp even more gas and maintenance. Your car doesn't exactly bring in any income, and even if it does, over time, it will only reduce in value. So by the time you're ready to sell it off, it would definitely be at a price lower than the amount you got it for. Now, you know that a car is not an investment, and it's the same with timeshares. This is one investment you should leave behind in the 90s, as it brings only regrets. So how does it work? Well, timeshares are mostly given by vacation houses and resorts. You could walk into a beautiful hotel, and after exchanging a few pleasantries, the receptionist would lure you to a timeshare seminar by giving you some resort credits. And so you attend and realize that the offer is to buy a timeshare for thousands of dollars, while you also pay a maintenance fee for owning this timeshare. The trick here is that you're made to believe that getting a timeshare automatically gives you partial ownership of the resort, but it's not so true. It doesn't even give you equity, but only access to the resort for free for about a week. You're better off renting a room somewhere else than getting a timeshare at any resort. The worst part? When you understand that it's not a worthwhile investment and would like to sell your timeshare off, it reduces in value. So you could buy yours for about $30,000 and end up offering it to someone else for at less than half of that price. There is no resale market for this investment product, so you'll be stuck with it for a very long time, including the annual maintenance fee that would empty your pockets in no time. So this investment should remain in history. Certificate of deposit. Once upon a time, certificates of deposit were the creme de la creme of the investment world. Instead of dropping their money in a savings account, people would rather give their money to a bank to have it locked up for a few months or even years. What you get in return is your certificate of deposit and a much higher interest rate compared to dumping your money into a savings account. It was also a great way to protect your cash from inflation, but not anymore. Now the interest rates are much lower, so your money actually loses value during this time. To make matters worse, you won't have access to it at all. You can't even change your mind in the middle of your investment. Rather than getting your money stuck in an investment that's basically reduces its value, there are better ways to get it growing. Collectibles. The collectible market is a very unpredictable one. Sure, Pokemon trading cards have become a big deal today, with people spending hundreds of thousands of dollars on the rare collections. But it took about 3 decades for that to happen. What if they never caught on and nobody wants these trading cards today? Well, if you invested about $1,000 at the time, only for them to be useless today, that would be a bloody waste. Given how long it takes for you to get the profits on this investment, we suggest that you let it remain in history. Investing in collectibles is too speculative, and it's difficult to predict that something will have a higher value in about 50 years from now. But if you must dabble into this investment, it's best to put very little into it, so you're not worried when it doesn't turn out as expected. Online surveys. It may be a little surprising to many of you to see online surveys on the list of bad investments, but you'll understand why in a minute. Do you know that you can pay to take surveys online to earn money? While some people will agree that you have to spend money to make money, dumping it on online surveys is not the way to go. You will discover that after spending money and time to rack up quite a stack of these useless online surveys, you won't get paid. All you get in return are a couple of viruses on your device and virtual money you can only stare at. So we can all agree that these are pointless and shouldn't be on your radar in 2021. Multi-level marketing. This is one of the worst investments you can consider trying at this time. A more common word for multi-level marketing is actually a Ponzi scheme. Now you're getting the idea of how terrible it is. Usually, this investment type is one of the biggest scams in the online world. It's been in existence for a while and several people have fallen for its tricks over the years, but you shouldn't be one of them. Here's how it works. A multi-level marketing company would offer you guaranteed returns as high as 30% every month. And when they say guaranteed, their ads swear that you would get every single dime back with your interest. This is where you start to see the red flags. High returns usually means that it's a high-risk investment, and there is actually no guarantee that you'll get your money back. Where is this money coming from? Another common thing with this kind of company is that everything relies on more money coming in from new investors. So what you're getting as profits is essentially the money from new investors, and that's why they always insist on referrals. The more people that come into the system, the more they can pay other investors, until it all comes crashing down. How can you identify these multi-level marketing companies or Ponzi schemes? Usually, they won't be upfront about what you're investing in and how they're making their money. So the first rule is to know exactly what you're investing in, then run away from those that offer astronomically high guaranteed returns. All it requires is a bit of research, and you won't waste your money on this fraudulent investment. Pieces of jewelry. Several movies have made us believe that jewelry, especially diamonds, last forever, but that's not true. Investing in a piece of jewelry requires a great deal of patience and a little bit of luck. Since almost everything degrades with time, it could feel like an eternity waiting for a return on investment for your piece of jewelry. It's just like buying a fine piece of art that could take several years before it increases in value and qualifies as an antique. And since a huge number of us wouldn't want to wait about 30 years for our investments to appreciate in value, especially as it's not guaranteed that we'll still be here, then it's best you buy your jewelry just as personal adornment rather than an investment. Now you know the 7 big investments that must remain in your past, and that's a wrap. We've already talked about some of the major bad investments. What great investment have you tried that turned out okay? Let us know in the comments. And did you like this video? Well, we're always posting amazing content like this, so don't forget to subscribe to our channel so you don't miss out. Thanks for watching.